Welcome! We've put this guide together with the experts at My Tax Accountant to break down a huge change here in the UK. We're talking about how HMRC's powerful AI is now automatically looking at your online sales. So if you sell anything on any UK marketplace, you really cannot afford to miss what's coming next.
So, let me just ask you a quick question. Have you sold anything on Vinted, eBay, or Etsy recently? Maybe an old jumper, a vintage find, or one of your own creative projects. Perhaps you've even rented out a room on Airbnb. If you're nodding along, you need to listen up.
Because from this point forward, HMRC, that's His Majesty's Revenue and Customs, they know about it. And the keyword here is automatically. The whole game has changed for online sellers in the UK, and honestly, understanding these new rules is absolutely crucial. Okay, let's dive right in. To make sure you've got all the facts, we're going to walk through this step by step. First, we'll cover why HMRC is watching you. Then we'll take a peek inside their powerful Connect system. We'll get into the new platform rules, figure out that big question of whether you're a trader or a hobbyist, run through a simple compliance checklist, and finally, we'll talk about where to get expert help. So, let's start by setting the scene. The days of your little online side hustle flying completely under the radar, well, they're pretty much over. The entire landscape for selling online has fundamentally changed, and it affects millions of us across the country, whether we realize it yet or not.
Let's make this real with a quick example. Picture Aisha, a graphic designer living in London. To make a bit of extra money, she sells her old clothes on Vinted and some of her own art prints on Etsy. Well, under these new rules, both Vinted and Etsy are now legally required to gather her sales data, how much she's selling, how often, and report it straight to HMRC. And this is happening across the board, from Deliveroo to Airbnb.
Now, you might be thinking, this sounds like they're just targeting small-time sellers, but it's really important to note this isn't just a UK thing. It's actually part of a massive global push for tax transparency, and it's all being powered by some seriously clever technology designed to close what they call the tax gap.
And what a gap it is! This enormous figure represents the estimated difference between the tax that's owed and the tax that actually gets collected. We're talking billions and billions of pounds in shortfall for public services, and HMRC is now using some incredibly powerful tech to try and close it. The engine driving all of this is a system called Connect. The best way to think of it is like a digital detective. It uses sophisticated AI to sift through absolute mountains of data from all sorts of places to find financial patterns that a human could just never spot.
And the amount of information Connect can see is, well, it's pretty staggering. We're talking about billions of data points. It pulls info from your bank accounts, credit card transactions, property records, and yes, even publicly available information from your social media, all to build this detailed financial picture of every single taxpayer.
And make no mistake, this system is ridiculously effective. In just one recent year, the Connect system was credited with helping HMRC bring in an extra £4.6 billion in tax revenue. So this isn't some minor experiment. It's a core part of their strategy, and it's getting smarter all the time.
So, how exactly does this Connect system get all that online sales info? Well, that brings us to the new rules that these digital platforms have to follow. This is where it gets really specific for anyone selling online, as the UK has adopted these rules to create a standard approach.
And this slide lays it out perfectly. There are two really clear tripwires that trigger automatic reporting from any single platform. In one calendar year, if you sell 30 or more items, or if you earn more than about £1,700, that platform is now legally obligated to send your details to HMRC. You only have to cross one of those, and you are on their radar.
This is it, the big question on everyone's mind. If Vinted or eBay reports my sales, am I automatically going to get a tax bill? And the answer is, not necessarily. Stay with me here. This next point might actually surprise you, and it is the single most important distinction you need to understand.
The answer to whether you owe any tax depends entirely on this one question. Are you a hobbyist seller or are you trading? In the eyes of HMRC, your intention is everything. That's not all. Here's where most people go wrong, and believe me, the consequences can be pretty costly.
This breaks it down perfectly. If you're just selling your own unwanted personal things, like clearing out your wardrobe, you're a hobbyist. You're not really trying to make a profit, so generally, there's no tax to pay. But if you are buying or making things specifically to sell them and make a profit, you're a trader. Let's go back to Aisha. Selling her old clothes is a hobby, but selling those new art prints she creates for sale, that's a trading activity.
Now, if you've worked out that you are in fact a trader, even if it's just a small side hustle, this is the magic number you absolutely have to remember.
This is the trading allowance. It means you can earn up to £1,000 from your trading activities in a tax year, and it's completely tax-free. If your total trading income is under that amount, you don't have to declare it or pay tax on it. Simple as that. But the moment you earn even £1 over that £1,000, you have to register for self-assessment and declare all of your income.
And now for a massive pro tip that catches so many people out. This $1,000 allowance applies to your gross revenue. That's the total amount of money you actually receive from your customers before you take off any expenses. It's not your profit. So if you sell £1,100 worth of stuff, even if your costs were £500, you have crossed that threshold and you have to declare it.
I know this can all feel a bit much, but staying compliant doesn't have to be some big, complicated nightmare. So now let's look at the next step by breaking it all down into a clear, simple action plan that you can follow.
Really, there are just 4 key steps. Number 1, track everything. Keep a simple record of all your sales. 2, be honest with yourself and figure out if you're actually trading. 3, add up your total gross trading income for the tax year and check if it goes over that £1,000 mark. And finally, number 4, if it does, you must register for self-assessment with HMRC. Following this process will give you total peace of mind.
Look, the rules are new, the technology is incredibly powerful, and that line between a hobby and a business can sometimes feel a bit blurry. Getting it wrong can lead to penalties, so please don't try to figure all this out on your own. Professional help can make this whole process simple and stress-free.
And that brings us to a really important point. Please remember, the information we've shared here is for general guidance only. Your own financial situation is unique. To make any decisions about your tax, you should always consult with a qualified professional tax expert who can give you advice that's tailored specifically to you.
And for exactly that kind of expert, personalized advice, we recommend contacting the team at My Tax Accountant. They are specialists in this area and can help you understand your exact situation and make sure you're fully compliant. You can reach them on the phone number 0208-570-8531 or using the email address on your screen right now. So the question I want to leave you with is this. Are your online sales tax ready? The reporting rules are in full swing, and this system is only going to get smarter. Don't wait for that brown envelope from HMRC to land on your doormat. Be proactive and get ahead of it. And for more essential updates just like this one, make sure you subscribe to the channel. Thanks for watching.